Hey everybody, welcome back to Drawbridge Finance. My name is Levi Woods. I don't know why I get so excited about investing, but I really do. Today I'm going to do a video about dividend checklist. I want to buy a dividend stock or a dividend ETF, and I'm going to run down my checklist of things that I look at before I actually make that purchase. As I said before, I am having an amazing day and I hope you guys are too. I mean, your support is so wonderful. I have like Patreon supporters and I've got people that are liking my videos, subscribing, turning on the notifications bell. You guys are great. I'm doing great. The stock market's up. I think it's going to continue to go up. My dividends are paying me as always, and option trading is good. I mean, life is just good in general. So I hope you guys are also having an awesome time. As always, my name's Levi. I'm not a financial advisor. I don't work in the financial industry. This is an opinion channel about money, and this is my opinion about my checklist of dividend paying stocks or ETFs, what I actually go through when I look at a dividend stock for the first time. So here we go. Number one, does the outlook look positive, neutral, or negative? Because I don't care if a stock is going to be neutral or go up, but I definitely don't want to be looking at a stock that is downtrending. I mean, if I'm looking at a sector or a stock that in a certain market that is just going to be continuing to go down, like a couple of years ago when I started to get rid of my REITs that were heavy into shopping malls. I was like, people are going to shopping malls less and less and less. I want to get away from those types of real estate investments. So now I invest more in residential and office building REITs than I do in like consumer staple REITs. So that would be one example of where I'm forward looking at the sector and saying, okay, what is the outlook in general? That's the first thing. Now, the second thing I look at is the dividend yield. Is it high enough? Now, in the last couple of videos, we talked about different types of accounts and what the targets would be for the dividend yield within those specific accounts. So if I have some money in my registered account, then I might actually be looking at a dividend stock play that has a little bit lesser yield than, say, something for my tax-free account. So I want to know, what is that dividend yield? Typically, I target 6 to 10%. That's typical, but I can go down as low as 4 and up as high as around 14%. So the third thing I look at is if the dividend payout ratio is low enough. What I don't want to do is invest in a company that is paying more than 100% of its income to dividends, because that is unsustainable. If a company takes all of its income and gives it all to its shareholders plus some, if that payout ratio is higher than 100%, it is absolutely unsustainable. The company will not be able to pay more than its income out to its shareholders for any extended period of time. And it's different for different sectors. For like a REIT, for example, I might be comfortable getting something that's paying out like 95% of its income, because that's kind of how REITs operate. But if it's something different, if it's a different sector, I might look for a dividend payout that's in the 65% range. It's just one of those things that I look at, is the dividend payout ratio low enough? Now, the fourth thing that I look at is, does the balance sheet work for the company? Now, you just have to look at the last quarterly report and see like if that is changing quarter to quarter, if they're going into massive amounts of debt, if they're expanding irregularly. There's different ways of reading company statements and balance sheets, and it's something that I look for before I make a purchase, because I want to make sure that there isn't some weird thing happening. A company that just has like a huge growing debt quarter after quarter while they're paying this massive dividend. That would probably not end well in the long run. Which leads me into the next one, which is number 5. Is the earnings per share positive or negative? Basically, I want to know, is the company actually making money? Looking at a company like Beyond Meat, the stock is going up spectacularly, but the earnings per share is negative. It does not make sense to me, and it's why I don't hold that particular stock in my portfolio. If I did, I would be short selling it. I don't think that it has a valuation that it should have at $200 or whatever it is trading at today. So number 6 would be, which account would I buy this stock in? I'm going to look at the stock and say, okay, well, if I bought this stock, if it's a foreign dividend paying growth stock, then obviously I would make that choice in my RSP and not my TFSA. And I went over that in that other video, so you guys go back and watch it if you haven't already. I'll put a link at the end to link back to it so you guys can check it out. And so number 7, is the trading valuation currently low enough? And this is where I would use like my simple moving averages, and I would look at the stock and I would look at the chart and I would say, okay, here's the normal trading range of this stock. Am I buying it at the high point of the trading range or the low point? Because sometimes I find a dividend stock and I just put it on my watch list and then I watch it until it hits that valuation range, especially for stocks that are quite cyclical, which a lot of them are, especially with these dividend plays. They're just kind of up and down slowly within quite a static range. And that's the kind of stuff that I like to look for anyways, is that static range, slow, low growth with a consistent dividend. Number 8 would be, am I buying this on a foreign or domestic exchange? Now, the reason that I look at that is because if I'm buying something in the United States, then obviously I would make some decision as to which account it would go into. So if I'm buying it on a domestic exchange or foreign determines the type of account that I would put that into. Number 9 is there enough sector diversity in this portfolio? Like if I have a whole bunch of REITs and I'm looking at another REIT stock, it's like, well, maybe that's not the best decision. Maybe I should be looking at an oil services stock because I already have enough REITs. So you have to kind of look at it overall as to that particular stock. Does it fit in with your overall plan? And then the very last thing I do is I determine what I'm going to do with the drip. If I was to purchase this stock, how do I set the drip up? Do I want to get the drip in more stocks every month? Because that might affect my minimum purchase. I did a video recently on that as well, on calculating the minimum investment required to make enough dividend per month to actually purchase at least one share. Or maybe it comes in fractional shares for some people that have the benefit of that. I know I have like 5 accounts and I can't have fractional shares in any of them. So if you have that benefit, that's amazing. And then or you could take it in cash and you could supplement that with other cash, and then you can build that up in time to make your next dividend purchase. Anyways, that's it for today's video. I know it was short and sweet, and I hope that we can all get rich together. So remember to hit that like button, subscribe, and thanks so much for watching.